2007, when Steve Jobs, the guy who inspired us all, launched the first iPhone, and it was magical. Everybody remembers that magical moment? Who's not seen that video? You're drinking with me later, if you've not seen the video. Everybody seen that video of the first iPhone launch? Yes? No? Hello, Singapore? Yes, thank you. So the first iPhone launch changed our lives, and I genuinely believe we are all in this room today because of the first iPhone. The first iPhone gave us a reason to build apps. As apps came out, Amazon's usage increased because it was an easy way of launching your business. Spin up a server on AWS in under 3 minutes, connect your storage, and you go on. At that time, I think early 2011, 2012, I was selling data center back in London. Cisco, NetApp storage, EMC and all that. And one day somebody said, there's this company called AWS, and they're saying that we don't need to buy a physical data center anymore. You can move everything to the cloud. Some of the guys in the room said that nobody's going to do that. Data privacy, people will continue buying physical servers. I was probably the youngest in the room. I said, they are. You have no idea how lazy my generation is. We are not going to buy physical servers. If we had an option to log into a platform and spin up a server and launch our application right there, we will. Data center stuff is hard. You've got to buy physical servers, go into a data center, plug them up. Sometimes you've got to wait for 45 days for a Cisco Blade server to show up in your data center. It's not fun. And AWS obviously became one of the $19 billion revenue last quarter. Is that right, Anna? Yeah. So one of the largest companies in the tech space is with us today. Let me first introduce Anna Green. Anna, can you please come on stage? Guys, Anna used to be the CEO of the bank. Anna currently runs SME business for APAC, Japan, South Korea, etc., and AWS. Anna, have a seat, please. I'll get you to introduce yourself in a little bit. So as AWS became a service that we could all easily use, businesses like MoneySmart could spin up a server and launch their websites. I'm not sure where you hosted. I hope it's AWS. Which made it very easy for apps, for B2C companies to launch their services, build products for consumers. I'll introduce David now, MoneySmart. If you can please come up on stage. David is the managing director. He's from London, and I'm from Sydney. So we have Sydney, we have London, and as businesses like MoneySmart started taking shape, they hit a problem of scale. Being able to understand what consumers are doing on their websites and apps, and based on that, how to engage with those consumers. So that gave birth to companies like Amplitude and MoEngage, because our founder, as an example, was trying to build an e-commerce company, a B2C company, but he had a problem of scale. Okay, how do I segment my users? How do I engage with them? How do I look at the analytics? I'll introduce Julio now, a company that's hosted on AWS and 200 million ARR, public company, they've done really well. Julio, sorry, what's your hometown again?
San Francisco.
San Francisco. So we have Sydney, London, San Francisco. I'm from a small town in India, nobody knows. I won't go there. Okay, I'll hand it over to Julio, please, to introduce himself.
Hi, everyone.
There we go. All right. Hi, everyone. My name is Julio. I'm the VP of APJ here at Amplitude, and our job is to build better products.
Over to you, David.
Hey guys. Oh, that's loud. I'm David, Managing Director of MoneySmart, which is the Asia's largest personal finance marketplace.
And he used to work at Google.
And I used to work for Google.
I wanted to add that because it just adds to the gravitas in the room. So my name is Anna Green. I run, and before we go on, I I do need to take a moment just to acknowledge the excellence of our interviewer today. And I have watched him really just in the last hour be one of the most entertaining people I've ever seen at an on-stage event. So a little round of applause for Sir Aberdeen.
Big round of applause.
And indeed, the reason that I came here today was because Saurabh is such a great industry leader, and indeed when I first started my job at AWS, so as Saurabh has explained, I've moved quite recently into the technology industry, although I would argue that banking to some extent has been a part of what is happening around digital transformation in technology really since the inception of digital innovation. Although we just had a conversation about that term as it is used in banking and in the industry, digital transformation. And how very often it's used and how very little it's understood. So anyway, my name is Anna Green. I run the APJ SME segment for AWS. And to give you guys some context of what that looks like, we estimate the number of SMBs as we estimate them, which is customers or companies that have under $100 million of revenue, which for most people are like, that's actually not a small business. For our business, that's a small business. That's 176 million customers across this footprint. So the conversation we're about to have is super relevant in that context, but also in the context of my previous role, which was as the CEO of a bank. I ran ANZ Bank in the Philippines, and then prior to that in a little country called Laos. And some of you may think, wow, first of all, you might think, where is Laos? Secondly, you might think, that's a strange place to learn about banking, but actually it was a fantastic place to learn about banking because you've got two real challenges. You've got an international regulated industry, so I had to run the bank to international standards, and the Australian regulator is one of the hardest in the world, with really challenging infrastructure, challenging regulatory environment, challenging everything basically. So it was a great way to learn about what banks have to go through as they think about a digital journey. And then before that, I was a lawyer. So that is my very unorthodox career journey, and it is my pleasure to be joining you today.
Wow.
That was such an intro.
No!
Yeah, I just sell software.
I feel like I didn't do it justice.
Yeah, I wish I was
I know, I was like, we can take this several ways. We can just be formal.
Round of applause for Sydney.
In the conversation, and I believe that this audience is probably up for something interesting. It's about 4 o'clock in the afternoon. This is the time when
just after the break as well.
I'm just saying, it's free flow cocktails after this, so let's make it interesting, sir.
Do you want me to get off the stage?
Exactly. Where's the cocktail?
Okay. This is amazing. I love it. Okay. So we have 3 non-Southeast Asians talking about the digital fintech adoption in Southeast Asia. I absolutely love it. This can't be any more wrong. I'm joking. Okay, so Anna used to be the CEO of a bank in the Philippines, probably one of the most underserved market when it comes to banking and financial services. Julio is from San Francisco. He's lived here 5 years, running Amplitude business. And Money Smart. So we have a wide array of experience on the stage. So I'm going to start with my first question. How has digitization helped drive financial inclusion in Southeast Asia? I'll start with Anna because she's seen it firsthand living in the Philippines and now.
Okay. How has it helped drive financial inclusion? It definitely has. And it has in the Philippines in a material way because over 70% of the population there don't have bank accounts. It's really hard for people in developed countries to even get their head around that. One of the things that I remember being surprised about was just the team that I worked with when we were just doing very simple things like filling out documents, realising that many people in the Philippines don't even have a mailing address. So how do you get a bank account? How do you do KYC? How do you do anything that requires you to be registered with the government if you don't even have an address? And this is real, and it's a challenge that is faced not just in the Philippines, but in a lot of developing markets across Southeast Asia. So what digital technology has done has allowed those people a way to get access to finance where previously they couldn't. And it's done it in a couple of ways. The first is to use the device that is familiar to most of the people in the Philippines, which is a handphone. The Philippines, as you may or may not be aware, is the second largest user of Facebook in the world, outside the US. In fact, I think it might have already taken over the US. So over 5 hours a day on average using social media. So that population is well and truly entrenched in a digital context. Now, the challenge or the opportunity for financial services there is to say, okay, well, let's solve that. Let's solve the fact that many people have a phone, many people can, contact their friends and learn about things on media, but they don't have a bank account. How can we use digital technology to reach that population? So what I saw when I was there were the local banks experimenting with digital technology to create, and lots of different fintech solutions coming up across the region. I'm sure you guys have seen that as well. Like for me, that's been the most interesting journey, because oftentimes people in developed markets talk about fintechs and how they're building and disrupting banks here, but actually the opportunity for fintechs is really in that unbanked population in Southeast Asia. And I mean, I pass on to you guys on that. I'm sure you guys have got a point of view on that. Like, are you actually seeing those unbanked populations accessing finance differently?
I think it depends, right? Depends which market. We try and penetrate or develop markets. You're right. There's a huge unbankable audience, right, and consumer. We tried to penetrate sort of emerging markets, which was tough. But yeah, I think it's Philippines, Indonesia, Thailand, tough. Hong Kong, Singapore, Taiwan, a little bit more easier to penetrate. But yeah, the unbankable consumer in Asia is large.
Right, so there's your opportunity. What do you think?
Yeah, I mean, we've seen a lot of financial products take off. And I think one of the most exciting ones, at least from my perspective, has not only been an opportunity for people that don't have a bank account, but there's a lot of people that aren't participating in capital markets. And if you think about when you put your money into a bank, you're most likely going to get very little anything back, really. And so for people to be able to start tapping into these capital markets across regions and across the different markets is an exciting opportunity until this month. Until the market started.
It'll turn around, it always does.
Yeah. But I think that itself has created another level of financial literacy for people. And this is not even just, we're talking about in completely untapped markets like Laos or whatnot, but even in places like Australia and Singapore and beyond. So I think to be able to democratize access to capital markets is just another sign of technology kind of helping rise the tide for all those, right?
Yeah, I love that. And also, you've hit on something which I did see in the Philippines and in Southeast Asia generally, which is a propensity to use fintech differently. The consumer base here, 30% are under the age of 30 and have only ever spent their time on using a mobile phone, and as I said, massive hand phone penetration in the Philippines. So the opportunity for fintech is real in Southeast Asia, and the opportunity has only accelerated post-COVID. So we've seen, the acceleration of definitely, productivity suite marketing applications. We've just seen a huge increase in the engagement from the consumer base on those particular products, and I can say that, we're coming from an AWS context, we definitely see that as a growth part of what's going on in Southeast Asia. And so COVID has made it more immediate, the requirement for fintechs to get going and start building solutions for customers around things like KYC, so that people don't need to go into a physical branch to be able to get identified. We've seen ISVs building solutions like that where, massively had gone from a base of, a 200 200,000 person use case to 1 million within, a 3 to 6 month period. Like very quickly, that technology is being adopted and adapted and being embedded into financial services to make financial services more accessible to more people.
Thank you. So I think my take on that is the acceleration was supposed to happen. It just happened way too fast because of lockdown. People couldn't go out, buy things. Anybody who did not have a bank account eventually needed to figure out a way to buy things online and pay money online and get things delivered. David, question for you. Next one. The way on your website, you compare home loans, financial services, etc. The new trend in the market is digibanks, neobanks. What are you seeing around that? Are you going to start doing comparison on what one bank is offering compared to another one?
Yeah, it's super interesting, right? Because our business has been formed on traditional banks, right? So the mortgage, the personal loans, the credit card. And what you're touching on is super interesting. It's like the next generation of banking, right? Which is the digital banks. Do we partner with them? Small bit. Not as much as we could. I think it's super interesting in terms of where the category goes, personal finance, and how we can sort of extend our traditional banking products with the digibanks. But I think the digibanks eventually will take over the traditional banks, right?
Are they cutting the margins already? Like, if someone's using your platform to determine which is the cheapest mortgage, are you seeing a material difference in what the traditional banking product looks like versus the digibank? And do you see that as being a differentiator?
So it's interesting in the sense that we get insight into the traditional banking space. The digi bank space, we have no insight. So I wouldn't be able to know.
Are they keeping their algorithms?
They're keeping it
Private.
tight.
So digibanks, I think, no physical stores. They first have to launch their services. Standard Chartered is launching theirs next month. They signed with us, by the way. Just wanted to put it there.
Lovely plug.
Thank you. Julio, anything on the banking space that Amplitude are noticing, given that you help companies analyze all kinds of product data?
Yeah, definitely. I mean, I think one of the most interesting aspects of COVID has been that people have not been able to actually acquire customers in the way that they used to. But like we said, a lot of people are spending time in digital products, consumer apps that are highly tailored, personalized, really rich, relevant experiences for groups. And then they go to a digital bank or a traditional bank that's creating a digital product, and they go in and it just doesn't really work right. It doesn't make sense. And what we saw was actually there's a huge problem with people downloading those apps, trying to figure out how to open their account, getting stuck, or not really having a good user experience, deleting the app and going away. And the problem with that is that if you're on the marketing team for that company, you pat yourself on the back. You got the downloads, you got the installs, you got the clicks, but you're actually not generating revenue. And if you want that digital product to generate revenue, you have to understand what's happening inside and what your users are doing. And when we look at the public statements of some of these companies, and we were joking about this at the table, you look at what Standard Chartered is saying, what DBS, what a lot of people are saying out there, and they're, digital is the future. I'm making money. Digital is like our, the thing that we feel is most strategic. But they don't really know how those things are generating money. And I think that is going to be the next level because the consumers are expecting a type of experience that you can get from a Facebook or Airbnb or whatnot. But they're being confronted with these really old, poorly UI-driven experiences that I think is leaving a ton of money on the table.
Absolutely. I think digital banks are definitely the future. I think if you look at the e-commerce industry, today you could buy a product from Lazada or Shopee, and wherever you get best service, best delivery, better rate, you wouldn't really have a loyalty to anyone based on you're not loyal to a brand. But banks have had the luxury of tying us down into their services because it's really hard to switch a bank. As soon as there are 5 digital banks in Singapore, I think it will become super easy to switch. So they're going to have to fight for our business. We won't have to fight to get services from them. So I'm really excited about the digital bank. Anna, you got a comment?
Well, just that's the reason why regulators and traditional banks would have challenges with, the kind of open source or anything to do with the sharing of data. I mean, it's very obvious that there's a challenge there with their business model, because you are correct. The reason why, one of my favourite statistics when I was the CEO of the bank was when market research teams went out and asked people how they felt about going to the bank. They rated going to the dentist above going to the bank. And it's just a moment in time where if you're running a business where people would rather go and have a needle stuck in their mouth and sit in a chair versus just go and try and do a transaction with paper. And it speaks to your earlier comment, which is, and it's not just your generation, it's every generation. Nobody has the tolerance now for standing in a retail bank and waiting in line with a slip that you fill out, and then somebody says, actually, that's the wrong slip, you're going to have to go back a line. We all remember that, and it's just unacceptable customer service now, and that's how the world has changed. So yeah, I think to some extent traditional banks are holding on to that model for as long as they can, and relying on the fact that there's a whole cohort of existing customers who won't change, but the ones coming up are ready to go.
Okay. Anna's got a lot of insights to share. I'm going to put her on the spot with a question we're not prepared for. So Anna, you were the CEO of a bank in the Philippines, which was not a digital bank. Imagine a digital bank was getting launched in the Philippines tomorrow and you're still the CEO there. How do you compete with them?
I compete with the fact that most of the traditional banks in the Philippines are still, it's one of the only countries in the world where they're still building bricks and mortar retail branches. Because of what I just said before, which is that, notwithstanding the fact that 30% of the population are under 30, there is still a very big cohort of people that don't understand how to use technology. So the ones that you want, the customers of the future, are the ones who are doing digital. And this is the same, I think, this lens can be applied also to the workforce. We often have these conversations about the digital skill gap. And you have to understand that there are some people who want to go on that journey, some people who are enabled to and understand it, and others who simply don't have the capacity to. So if I'm running a bank in the Philippines now and a digital bank, I'm interested. I'm interested in what they're going to go after, but the reality right now is that the market that they're going to get will be all of those consumers who are learning how to use digital technology. It's not going to be the existing people whose name is on an Excel spreadsheet in a branch. That's still a reality. Often we don't talk about that in technology, but it's true. And sometimes I think when we talk about tech, we think, well, actually, you know what? They're the dinosaurs. Doesn't matter. But that part of the business is still material and drives a huge amount of revenue for banks. So you've got to know both, and it's very sensible for you, David, to be looking at both traditional and digital, I think, because they're not going away, and they're very smart and capable businesses that know how to run their businesses very well. So it will be a mix until one comes to the surface, and it'll be time, it'll take time, it's not going to happen tomorrow, but it's a journey, and it's the reason that I moved into technology.
Great to hear. Any comments, David?
I agree. Lucidly. I think digital adoption is still a challenge, and so we try and enable as much digital interaction as possible. COVID has clearly enabled and fast-tracked some of that, but you're right, that there's so many traditional behaviours that exist when it comes to banking. So take Singapore as an example. There's a lot of people in Singapore that need to go to the bank, and they feel comfortable to go to the bank. opposed to doing their banking online. And that's a big behavioural shift to influence and change, and it's tough. There's other markets globally that are more comfortable to do their banking online. And I think it's sort of, COVID was the perfect storm for money spot, right? In the sense that people were forced to come online, and I'm sure it's the perfect storm for most digital-enabled businesses, right? And we saw exactly
2,000% growth.
Exactly. And so it's, look, the digital banking environment is still not as penetrated as it could be, put it that way.
Got it. Okay. I'll ask a question about your business, if that's okay, very smart. I was just doing some research on the website. You've got a crypto section also now. So you've got home loans, credit cards, a crypto section, a bunch of other services. What kind of trends are you seeing in adoption of different services? Where's crypto? Where's home loans? Where's credit cards?
I think, look, crypto is a bit of a buzzword, I think. Clearly, it's a big category, and there's many people paying attention to it. I think in terms of our trends and what we're seeing as a company and as a business, I think investment is big now. We're seeing less people interested in the market around getting a credit card or getting a mortgage. I think they are life stage circumstances that will always occur. I think the big trends and the big topics are definitely around investment. We've got two main markets in terms of Hong Kong and Singapore, and that's a big trend. Crypto is, how many people really trade crypto? It's such a small space at the moment, very big sort of buzz area. I'm sure if I asked anyone in this audience now who has crypto, it's 5%.
Well, let's ask. Who has
crypto? Other than Mr. San Francisco.
Yeah, I was going to say, I was about to refute all that.
Exactly. Like, who actually has crypto? It's such a small...
It is. I think I saw about 7 hands, 8. Yeah, you're right.
I counted 6. Out of how many people? It's small, right? It's small.
And the Singaporeans are more likely to invest in crypto.
Exactly. Says Miss Sydney.
I won't say Singaporeans, the developed markets are more likely to invest in crypto. So yeah, this is probably an educated technology audience so this is not a representative sample of the population of the world. Very educated financially, however, and I have full respect to you all for that. But I tend to agree with you also because what I hear about crypto, I'm super interested to hear your point of view, Julio, because I want to hear your absolute counter of that position.
Yeah.
But I tend to agree with you in that, coming from a traditional banking background, and certainly hearing what Christine Lagarde had to say about it most recently, which was after doing, and this is someone who spent a huge amount of time studying financial products, financial systems and processes, essentially said, listen, it's something that is intangible. It doesn't have any kind of security basis, and therefore it's hard to value. The regulators don't know how to understand it as an asset class, and therefore, for me, it's still not a conversation that I want to engage in terms of an investment proposition. Maybe there is a situation for retail investors, high worth private equity investors, maybe, but for the mums and dads, it's not a good conversation. It's not yet at that point.
So as someone who mined Dogecoin back in 2014 in my apartment, I can show you pictures later. I definitely think that in terms of is it a part of a well-balanced portfolio, I think it does deserve to be part of a balanced portfolio. I don't think that you should put your life savings into it. I don't think that's where it is, and particularly because if you actually look at crypto is actually many different things. And so you could probably use Bitcoin as like the easiest representation of it, and maybe there is some merit towards looking at a coin like Bitcoin in terms of being stable and going to invest in. In terms of whether it's backed by anything, most currencies are fiat, so I don't really buy that as much. But I do think that there are applications of cryptocurrencies that are very, very important. And the most important thing really is the blockchain. And so we have applications like Bitcoin on top of it, which are very popular and people are really excited about that. But if you actually look at things like Ethereum and Solana, there actually is a world where we don't need to have the same checks and balances that are extremely manual. We already heard on paper, in Excel, like all these things. In order to be able to understand who is really who, is that money actually that money? And there are ways for us to utilize smart contracts and blockchain to actually automate and remove a huge layer of inefficiency from capital markets. So with that being said, I don't advocate people go out and spend all their money on it, but I have, I think a perspective of crypto that is outside of just a financial instrument, but it really is an underlying technology that I think will ultimately change a lot of things.
I think if you want to learn more about it, and if you want to see a use case in practice, this will happen in gaming. This will happen in gaming, and this is an ecosystem where cryptocurrency will be experimented with, and if there is a place that is almost like a perfect storm of events where you will see it kind of build and go. But I think my point for people who are looking at it as an investment tool is that it's a very long game.
It is a long game. It is a long game. I think that if you have the right time horizons, it can be extremely lucrative, right? If you look at
25 years.
10 years, right?
And I shouldn't be laughing because that's entirely viable. Like that is a part of an investment strategy.
It is, right? And so I think that if you're setting aside 3, 4, 5% or something, right? And you have a time horizon of 10, 15, 20 years, you look at Bitcoin, it's appreciated thousands of percent in the past 10 years, People are concerned about what's happened between now and 3 months ago, and of course that's always on top of everyone's mind, but if you have a long view of the market, it's been absolutely crazy. And so again, I don't advocate, but most importantly is I think it will be another way where the financial market just becomes more competitive. Because whether or not we end up adopting it and Bitcoin becomes the end-all be-all technology, that's not what's really important. It is going to cause people to actually have to compete for asset classes, currencies, and we're seeing an entirely new world of competition. And you talked a little about taxes and regulatory frameworks, and that will be another area of competition. Citizenship as a service will be something that I think will happen in the future as well. So I think it's a part of a more macro trend towards decentralization of power.
I can't believe you just said citizenship as a service.
I had to drop that line.
That's golden. I feel like we're on the edge here.
I feel like I'm going to steal it.
It's so Caucasian. Okay, so we spoke about digital banks, we spoke about crypto. The third big digital or fintech wave is buy now.
My name is Julio Bermudez, bro.
Mr. San Francisco.
It is. We're going
everywhere.
This is at the edge of the, you want to come here for cutting edge commentary, and that's what we are delivering. Citizenship as a service. Put your hands up how anyone has ever heard of that with reference to cryptocurrency.
And I'm still stealing it, by the way, so it's not yours, it's mine.
Just wait.
Sorry, we've completely...
This is probably the
third
just bulldozing the panel.
Third panel of the day. We had Indians and Singaporeans, and it was very peaceful. We had 3 white people on the stage. They just talk amongst each other.
Yes, the main event.
Amazing. Okay, buy now, pay later. The last topic of the day. We spoke about digital banks, neobanks. We spoke about crypto at length, citizenship as a service. I love that. Buy now, pay later. So there's these 3 big waves in the market that are just, there's new businesses every day. Anybody use buy now, pay later amongst the 3 of you?
I don't, but I know.
It's not really our demographic.
Yeah, I know a lot of people
Not
like
your
it.
demographic.
It's a big thing. It's a big thing. Becoming bigger.
Julio doesn't use buy now pay later. He's got $1,000 cash in his pocket.
And cryptocurrencies are just good.
He's getting paid too much.
My Dogecoin, it's like fractions of a penny now.
Someone's paying him too much.
Elon, thank you.
Amplitude are also co-sponsored today. I'm going to check with my team if he's paid in crypto or he's actually paid in normal.
Check his crypto wallet. There's something there.
Okay, buy now, pay later. What do you think is going to be the real challenge for them to scale? You spoke about markets where
Regulation.
regulation.
Of course.
Okay, tell us more.
I mean, it's for me, that's the gap in the market, right? And that's also the reason why they've been able to be so effective, because it's a part of the market that is not, and it's part of what happens with regulation is that, and with regulation of technology and fintech in particular, is that the regulators have to run to catch up, but once they understand it, it becomes a much more kind of challenging conversation for the industry. So buy now pay later has kind of grown off the back of not being regulated in the same way the traditional financial industry has, and it's providing an amazing proposition for people who otherwise can't get credit. So it's a really different and interesting business model, and the people that have built it have thought really intentionally about it. And I believe that the next part of that will be, how is that regulated? How does that look? What does that look like for traditional banks?
Yeah, I think we touched on, which is people that can't get credit now have access to these types of instruments. Afterpay is one of our customers, and if we look at what they've been able to do, they've really been able to provide power to those who were powerless before. And so I think again, as we talk about all these different changes, I'm not going to get super wild on you in terms of what I think about credit scoring, but credit scoring itself hasn't changed largely over the past 30 years, right? And so I think that is another reason why buy now pay later has been so successful, is because people that didn't have access to credit before are now able to just do that very quickly without having to go through an entire process, right? So I definitely think that it's one of a basket of things that a bank or any kind of digital bank needs to offer. And if you look at like Afterpay, they ended up getting acquired, right? And I think that there's a lot of really interesting things that you can do when you kind of free yourself from the traditional ways of scoring consumers.
I'm trying to make you have the next word if you want to.
Buy now, pay later.
When are you buying MoEngage? You can pay later.
I think look, the traditional banks are now moving into that space, which is fascinating for me, right? It's unregulated. Be careful.
Also, and Afterpay is an amazing example of this. They know their customer segment very well.
They know what's going on in their products.
Exactly.
They really do. And one thing that's interesting about credit risk, and it's known throughout the financial industry, and I don't like to generalise, but there are a couple of studies around this, that women are a much better credit risk than men. I don't wish to offend anyone on the stage.
Do you have any data to back that up?
No, it's just, certainly women.
Is that an opinion?
Yeah.
Strong correlations there.
No. It's more around the studies that have been done on microcredit, particularly in places like India, where they're giving small loans to women in the community who are paying them back, and then they've taken note of that, and they've learnt about the way in which women borrow money, and often buy now pay later provides an opportunity for women who maybe don't have a full-time job on record and a contract that says, here you are, give me credit, but those women know about the concept of paying money back. They're a good credit risk, and these companies understand that, so they're willing to take a risk on that because it's known data, it's known information about the cohort of customers that they're going after. So it's not a surprise to me that they're being successful.
Okay, guys, in the interest of time, I'm going to open up the floor for questions for about a couple of minutes because we have one more session after this between us and the cocktails. Any questions? Vishal's got a question. Can we hand over the mic here, please?
Okay, the question is to Sarah. Yeah. Congratulations, you guys have raised your Series E. Being a head of product at Purple, from the B2C sector, for us, developing feature set was always, I would say, traditionally it's easier for us. Being a B2B business like yourself and consistently growing across the region in SEA, how do you decide what do you do next? Or what do you build next?
From a product perspective.
Yeah.
Okay, so pretty much what B2C companies actually do, they look at the data, they look at the analytics, they use products like Amplitude to understand what's missing in the product, where are the drop-off points. We don't have the luxury to analyze data in a platform, so we talk to our customers very regularly to understand what is the next big challenge that they are trying to solve for. And then it gets fed into our customer success team, it gets fed into our product team. If we need to, we bring them on a conversation and get them speaking to our customers. There's somebody here today who talks to our team pretty much regularly from Creative, the headphone company, a gentleman by the name of Mr. Boom. He's been talking to our product team for a good couple of months, requesting some new features. So we talk to our customers, but we also look at industry trends. We look at what are the new things that are coming out in the market. At the moment, we are exploring Web3 very closely. Trying to understand where Web3 is going to go and where do we fit into the whole Web3 space. That's why Sean was here earlier. Yeah, so a lot of conversations, a lot of discussions with our existing customer base. Thank you.
We got to get you on Amplitude.
Sure.
Yeah, I mean, if you look at the largest B2B companies, like an Atlassian, I mean, the trend is product-led growth, right? And if you're in the B2B space, and it's something that I think, just like subscription revenue really changed software, product-led growth is going to continue to change things. And so if we look at how we build product even at Amplitude, of course we do the traditional things of like talking to customers, but it's really hard to scale that. And you get very loud opinions. And so what we try to do is we really try to look at correlation, and we actually found some super interesting things between not just whether or not someone buys us from a marketing perspective, but one thing about growth that's really important is retaining customers. And so how do you retain, how do you keep making sure that people come back and pay you year after year? And even for us, we think of ourselves as an analytics company, but the thing that we found was the most correlated towards retention was how often people share results with each other. And so we've developed an entire feature set. In fact, we now have an entire product team and engineering team dedicated towards sharing. And so we stood up that pillar, and that was based on the back of looking at some of the data and saying, like, okay, great, not only do these people use our product, but we're able to retain them. So for B2B companies, life and death is retention. I mean, I know it's supposed to be on sales, but that's the reason why we built customer success first, actually, even at Amplitude, was allow the product to sell itself and then to back that up with world-class retention.
Thank you. Pretty much what I said. Any other questions? Any questions for Anna? She didn't get to speak much today.
I feel like a bit of a wallflower.
Okay, no questions? I don't see any hands.
I think it's cocktail time, right?
No, we got one more session.
Okay, one more session.
Okay, a round of applause for